So in order for you to recession-proof your entire investment, it has really nothing to do with the investment itself, and it has more to do with protecting that investment by having all of your other finances in order. There's a huge secret that the very wealthy do. Right now I'm seeing it all over the place, and my students keep coming up to me and asking me about these recession-resistant stocks and investments, and everyone's pretty confused. So I'm gonna set the record straight. It's gonna help you guys understand exactly what's happening and what the best things to invest in right now actually are. So yes, we are in a market downturn. All the markets are pretty much beaten down anywhere you look. The S&P 500, Bitcoin, Apple stock, traditional companies that are great companies are all pretty much down year to date. And there are some companies or asset classes that are beaten down worse than others. But I keep hearing from my students that somebody told them to invest in recession-resistant stocks or something of that nature right now. And I want to challenge that. So first, what is a recession-resistant stock? The whole idea behind this is that certain stocks, certain companies have super high hype and do really, really well when the market is going strong, when our economy is going strong. But the problem is when the economy starts dying down a little bit, those ones get hit the hardest. Usually technology or luxury or these types of companies where people are possibly stopping spending in those as we try to figure out and navigate this recession that possibly might happen. So a recession-resistant type of stock or company would be something that's just a staple that everyone kind of needs, no matter if the economy's up or down. Something like waste management. You're always gonna need to have your trash thrown away, or energy, or AT&T or Verizon. You're pretty much always gonna need to have a phone to be able to call and text. So during a bull market, these companies aren't that sexy and aren't that fun because they're pretty consistent. They're not bringing in 20, 50% per year, but they're also not losing 20, 50% per year later on. So here we are now. We're at the point now, like I said, where the market has already dropped a good amount. In my opinion, this is not the time for you to start buying into these types of stocks. The strategy behind recession-resistant stocks is to have bought them before so that when the market starts to drop, your stocks and your investment doesn't drop as much as everybody else's, and then you can sell that stock if you'd like to and buy into the technology and the fun stocks that have dropped a bunch and are now at a good value. At this point, all you'd be doing is buying one of those less sexy stocks at a somewhat lower price, but it's really not going to gain a crazy amount later on. So if you haven't already, right now isn't necessarily the time to put money into those stocks. I can see the idea that between putting money into those stocks and just keeping it in cash during a time of high inflation, then yes, that is probably the better move. But that's not your only choices. You still can put the money into those beaten down stocks or those beaten down cryptocurrencies or real estate or whatever. And unless you need that money in the next 6 months or something, I think that's the bigger play. Most people that are very, very wealthy will tell you that they got rich during the bear market and not during a bull market. That just means that when all the cool, fun stocks were down, they bought in at that point rather than playing it safe, and when they came up big for them. So in order for you to recession-proof your entire investment, it has really nothing to do with the investment itself, and it has more to do with protecting that investment by having all of your other finances in order. There's a huge secret that the very wealthy do. I'm investing in all the things that I see high upside for in the future. For me right now, companies like Apple, Microsoft, Berkshire Hathaway, even Alibaba, which is super risky, I see all of them as something providing a need and a high enough competitive advantage against all the other competitors in their space. And they're all beaten down so much that it's such a solid value right now. I for sure 100% am putting a bunch of money into index funds like the S&P 500 and QQQ. I also see a lot of value in high dividend yield funds like SCHD. Now, if I was gonna start investing all the way from zero today, I just made a video on the 7.5 ways that I would take that 0 to 2.5 million, even while navigating this possible recession. Watch it now.